Failure of the Silicon Valley Bank on Friday is the second largest such failure in US history. It has sent tremors across the financial world. Market participants are worried about more disruptions ahead, as climbing interest rates cut off access to cheap money and expose vulnerabilities in the economy. For the past decade, market was flooded with cheap money that led to hundreds of billions of dollars being pumped into startups in the form of VC funding and angel investments. Cryptocurrencies saw some of the most gobsmacking rallies that made several overnight millionaires. It was COVID that brought that party to a screeching halt. To tide over the troubles brought by COVID, US Federal Reserve's balance sheet, which stood at $4.16 trillion on 26th of February 2020, by June 10 had jumped to $7.17 trillion. Over a period of 3.5 months, the Fed had printed and pumped $3 trillion into the economy. While the world was still struggling with COVID, Russian premier decided to invade Ukraine, leading to fuel, grain, and other supply chain crises. With inflation looming large and fears of a recession ahead, cracks in the global financial system, which was kept afloat on cheap money so far, have started to appear. According to a Reuters report, investors now worry collapse of Silicon Valley Bank could be a signal that the markets could be on the cusp of a reckoning. Aggressive interest rate hikes by the Fed and central banks across the world has left the investors to deal with a wide-ranging set of consequences. For instance, it triggered the largest sell-off in technology stocks since the dot-com bubble, a collapse in the cryptocurrency markets, a run on the US and British real estate funds, and an intervention by the Bank of England to prevent a near collapse of British pension funds in the aftermath of Credit Suisse crisis. According to reports, Silicon Valley Bank is the latest example of downturn in technology stocks and Fed's aggressive plan to increase interest rates to fight inflation. Silicon Valley Bank's regulatory filings show that 89% of the bank's $175 billion in deposits were not insured at the end of 2022. Head of the Federal Reserve Jerome Powell reiterated his call for more rate increases on Wednesday, but stressed that the discussion was still in progress. So far, the pain has largely been felt by investors and institutions who placed risky bets. But the S&P 500 plummeted 4.6% this week, nearly wiping out its gains for the year. While the Chicago Board Options Exchange Volatility Index, also known as Wall Street's fear gauge, rose to its highest level in 3 months. Silicon Valley Bank's failure has sparked widespread fears of a spillover into the broader banking sector. The Indian banking system, however, seems to be well capitalized and relatively more resilient. But startups like Paytm, Carvale, Bluestone, among others, are facing the brunt. The Silicon Valley Bank collapse has hit Y Combinator-backed Indian startups hard, with many struggling to manage their day-to-day expenses.